Tantalus is an electrical grid technology and communications company providing software, services, and hardware for utilities to create the smart grids necessary for our fast-growing electricity needs. We've got CEO Peter Londa here to talk about the grid. How smart or dumb is it right now? And how is Tantalus's technology going to improve its efficiency and capacity for our growing needs? I'm Martin Gagel with Market Radius Research. It's Thursday, May the 30th. Please remember this is neither a recommendation nor investment advice. We're here to learn about the company. Peter, great to see you. You were here last on the platform almost 3 years ago to the day, and Tantalus and our world has sure changed a lot then. Welcome, and please tell us what you've been up to.
Martin, thanks so much. It's crazy to think 3 years has gone by as quickly as it has, but it's a pleasure to be back. And thanks for providing us with an opportunity to provide everyone with an update on what we're seeing unfolding with the electric grid, how that impacts our world, and the opportunity that creates for Tantalus and our shareholders. But before I dive into a few slides and then hopefully get into an engaging conversation, Martin, as folks are thinking about where Tantalus sits, I'd encourage everyone to think in sort of two different capacities and sort of two different investment theses. One of which is what's referred to as the electrification of everything. If you think about your own life, or I'll personalize it. I think about mine. I'm sitting at my desk and I've got 6 different tablets and phones and devices that all require electricity. I now drive an electric vehicle, so that's a change from 3 years ago. I'm driving the F-150 Lightning pickup truck, which has a 19 kilowatt battery in it, effectively the same as a whole home backup generator. And so as I think about my world, I am consuming more and more electricity. So the electrification of everything is one element of what we're focused on. And the second, which is true to our history, is really modernizing the electric distribution grid. And so Tantalus sits between these two fundamental macro drivers of needing to deliver more electricity and how to do that in the context of the state of the electric grid across North America and other parts of the world. And we sort of fit right in at that nexus of electrification and modernization. To provide a quick update on sort of where we are, and certainly in terms of the progress we've made, we have a very simple purpose. That purpose is to help electric utilities prepare for the electrification of everything. And within the context of what we do, and if you think about the electric utility industry, there are utilities focused on generation, there's transmission, and then there's distribution. And distribution is where we all live and work. It's our neighborhoods, it's the cities we live in, it's the buildings some of us go to for work, or where our kids go to school. Our focus is on the distribution grid. We're not on generation, we're not in generation, and we're not in transmission.
Peter, sorry to interrupt, but just to make it really clear for everyone, the generation is generation. The transmission is getting it from the generation to the city or the factory, and then the distribution is all our power lines that we see outside of our homes and that sort of a thing, right?
It's the spider web that sprawls through the cities and communities where we live, the substations, the power lines that you may see along the streets, and all the way down to the distribution transformers, and then ultimately the meters on the side of people's homes, apartment buildings, office buildings, industrial plants. Correct. Does that make sense?
All right. Yep.
Great. So to that end, we continue to grow the number of utilities that we support. Through Q1 of this year, March 31st, we shared that we are now supporting and delivering technology and solutions to over 290 utilities. The vast majority of those utilities are located in the United States, and that's where 99% of our revenue comes from. It's part of the reason we report in US dollars. It's a bit of an anomaly. So the numbers that you see throughout our presentation or other disclosures that we make are all US dollars. We're approaching about 130 employees. Those are split between our headquarters in Burnaby, outside of Vancouver, and then really the customer-facing members of our team in the US, our sales, our marketing, our customer support, members of management like myself. The way we go to market and the way we continue to add new utilities is a combination of full-time sales folks in our team. About 15 members of our 130 employees are focused on sales. And then we supplement that with over 20 indirect sales channel partners, so distributors or manufacturers reps that are presenting our capabilities and our solutions to utilities, opening the door for our sales team to then walk through. We've got about 3.5 million intelligent devices deployed. So to your question, Martin, is the grid smart or dumb? It really kind of depends where you live and the state of the grid. Some cities, well advanced and very smart. Some cities, like where I grew up in New Jersey, there's still a manual meter reader who walks to the home where my parents live and reads the meter once a month. I would say that's not very smart. In terms of the financial progress that we've made, 2023, we set an all-time high in revenue generated at just over $42 million US dollars. We reported about $9.5 million of revenue in Q1 of this year. We've also made progress in the contributions to revenue. We hit an all-time high both last year, 2023, and that continued into Q1 of this year, where 35% of total revenue is now generated from software and services. And as part of that 35% of revenue, a substantial component of that is recurring in nature. Last year, almost $10 million of revenue recognized that's recurring, as our annual recurring revenue is something that we report on a go-forward 12-month basis. So coming into this calendar year, 2024, we report on a calendar year basis. We have $11.5 million of annual recurring revenue. Our annual recurring revenue is growing at about a 20% compounded annual growth rate. That dates back to 2016. So we're making very good progress on driving incremental revenue from our software and services, and that has contributed to some really record results for us. We track gross profit margin quite a bit as a smaller company. It's where we see operating leverage to drive profitability for our shareholders on a sustainable basis. 2023, all-time high, 53% gross profit margin for the calendar year, 52% for the full calendar year. It's the first time we've ever been over 50%. And as we went into Q1, or reported Q1 2024, 53% gross profit margin. On a year-over-year comparative basis, Q1 of last year was 47% gross profit margin. So we've really made some very good progress in driving gross profit margin on behalf of our shareholders. In terms of capitalization, I know that's always high priority for shareholders and investors. You can see we've seen a pretty nice uptick in share price since the beginning of this year. A couple of drivers for that we can talk about, but some of it is just blocks of stock that were traded in the February timeframe, effectively freeing up some shares from some former shareholders that have corresponded with an increased volume and increased liquidity on a day-to-day basis. You'll notice the pie chart. Even though we're a relatively small company, under $100 million market capitalization, we have effectively a large cap coverage in terms of research, 5 analysts covering us, and in terms of our shareholdings, over 75% of the shares are held by institutional investors today. While we have not yet really implemented or incorporated the recent financing that we closed last week, a $10 million Canadian bought deal that was led by Canaccord and Cormark Securities. You'll notice our cash balance here at the bottom of the chart still ties to the Q1 reporting. We ended Q1 March 31st with almost $5.5 million US dollars of cash. We have added to that by closing the $10 million Canadian dollar financing a week ago today. So the balance sheet is in pretty solid shape, ample ammunition for us to drive growth for this company and really support the working capital needs as we look out the next 12, 18, and 24 months. Beyond capitalization, I'll spend a few minutes talking about sort of the market in general, the size of the opportunity we're chasing, and then in the spirit of real update from our last conversation, Martin, I want to focus specifically on the TrueSense Gateway, which is something we've been articulating and sharing news for the past 2.5 years on, and really for us, a substantial catalyst of growth for Tantalus. First and foremost, the opportunity to modernize the grid is substantial. 60 to your question, is the grid smart? Is it dumb? I think of it more in the context, is it modern or is it antiquated? Is it an analog system or is it digital? To give you a high-level summary, 60% of all of the grid assets in North America today are at or have exceeded expected life. And so let me draw that down to a more specific asset itself. Transformers, they sit on utility poles like beer cans. They're on concrete pads. You may see them in your neighborhoods. They sit inside substations. They are one of the most critical and expensive assets that utilities manage. It's the transformers that dictate the flow and voltage of electricity that hits our house and the electric outlets inside your home. The average expected life of a transformer when they are built is 40 years. The average life of transformers in the United States is 45 years. There is a massive issue as it relates to the modernization of the grid and the fortification of transformers. When a transformer goes down, we have a power outage. Best case scenario for the utility, it only impacts a few of us. Worst case scenario for the utility, it's an explosion, mushroom cloud, if it's inside a substation, fire on a utility pole on neighbors' properties, right? That can lead to wildfires. We've seen, unfortunately, a number of utilities have to deal with those challenges and communities have to suffer. It's a significant issue. In terms of expected dollars, right, it is hard to envision, but estimated to be $2 trillion necessary to upgrade our grid. There are a lot of ways we can be very prudent and help utilities spend that dollar amount wisely and potentially offset or postpone some of the investment that's needed. And here in the U.S., I reference here, I live in the United States and support our organization from here, given where our customer base is. You know, there's over $500 billion of stimulus money that remains available where our technology is an allowable use. So the opportunity that we are pursuing is massive. Shifting gears, as we think about what is the biggest problem that needs to be solved to help utilities prepare for the electrification of everything, we've simplified that in one statement. And this is based on surveys that we run and decades of experience helping utilities, now a user community that's approaching almost 300 utilities quickly. From our perspective, utilities cannot modernize the grid without accessing interoperable data. And so as you consider and evaluate what we do and the value proposition we provide, it's all about accessing data for utilities and then leveraging that data to solve very specific problems, to pinpoint which assets are the highest priority and the most vulnerable to outage, failure, explosion. Where do utilities see risk, and how do we help them identify risk associated with extreme weather events? Storms, where I live on the east coast of the US, nor'easters, right? Where is wind most problematic for utilities? We can isolate all of those issues based on data. And the way in which we access that data is through a technology platform. That platform includes intelligent devices. So think like your iPhone, an intelligent device in the palm of your hand. We take the capabilities of an iPhone and we install that into an electric meter. We don't build the meter. We're building intelligence that goes inside that meter. We put that same intelligence, that same edge computing device in sensors that hang on power lines, in devices and measurement tools inside substations. And I'll give you a visual. It's a little bit easier in 3D. Here's an example of an intelligent device that we've designed, our intellectual property, manufacture. And it's this device or form factors like this device that get installed across the grid from the substation all the way down to the meter. From those devices, we access data. That data is communicated across a communications network. We sell and help utilities deploy either a proprietary communications network that's solely for the utility, or in some circumstances, leveraging public cellular networks to bring data to and from devices. That data then feeds into what we call our grid data management system. If for any of you that may be familiar with enterprise software, long ago there was a company called TIBCO, which was a message bus. It rode across all different types of software systems. And so similarly, we have, I'd say, a message bus on steroids in the form of grid data management. So how do we help utilities not only access data, but then what do they do with it? The data from our grid data management system feeds into a suite of enterprise applications. So to normalize that, for those of you that may use Microsoft, you have PowerPoint, you have Excel, you have Word, you have Outlook for email. Similarly, we have software applications to help utilities in different departments: load management, metering, outage management, engineering and operation planning tools. On top of those software applications, new since the last time we were on your platform, Martin, is data analytics. Those analytics are leveraging data. We're running those through and leveraging machine-to-machine learning. So we're using artificial intelligence in a prudent manner. And based on anomalies and changes in data to the millisecond, we're helping utilities through analytics pinpoint which transformer is stressing. Where do they have a tree hitting a power line? Where has a squirrel impacted insulation that not only electrocutes the squirrel, but can lead to a power outage? All of the things, all of the problems that we can help utilities solve to modernize the grid stem from the data we pull from devices. And as we think about what that means for the utility, I'll go through this slide, Martin, and then I'll take a pause and we can dive into questions and other topics. But just to give some perspective, the history of the utility industry has been focused on the left side of this slide. And the history of Tantalus has similarly focused on the left-hand side of this slide. How do we understand and provide visibility, command, and control of the assets utilities are responsible to manage from the substation through the power lines in our streets, down to the meter on the side of your home, an apartment building, or wherever you may be working today? That's what we focused on. That's what represents 293 utilities, $42 million of revenue, 53% gross profit margin. Combination of devices, data, software, analytics. What's unfolding and what's changed over the past 3 years is the right-hand side of this slide. And so if we take a step back, depending on where folks may be, we're seeing an increase in power outages. We're seeing an increase in transformer failures. We're seeing an increase in the number of electric vehicles that are getting registered, certainly East Coast and West Coast of Canada, East Coast and West Coast of the United States. When I travel out to Vancouver, I see an increased number of Teslas and now Rivians and Lucids, and for that matter, BMWs and Porsches that have gone electric. It never ceases to amaze me the number of EVs I see on the road. We also see in certain portions of the United States an increased penetration of rooftop solar as people try to reduce their carbon footprint and try to be better stewards of the environment. It's the changes at the consumer level. So coming back to my opening comments, I've purchased an F-150 Lightning. It's an electric vehicle. To give you some perspective of what that means and the opportunity it creates for us to help utilities, every time I plug that vehicle into the side of my home to charge, and it consumes a lot of power, so I charge it pretty frequently, I am doubling the amount of power that the utility has to deliver to my house. And if you think about what that means on a cascading basis, it is massive. It is a huge challenge, and it creates great opportunity. By doubling the amount of power at my home, the meter, which is probably about 25 years old, and I live in Connecticut, pretty urban area, the meter starts to heat up. The utility is responsible for that. The power line that connects to my home starts to heat up. I've got a lot of trees and squirrels in my neighborhood. Those trees hit that power line regularly. Squirrels are running on it all the time. And while I can't get into the psychology of squirrels, I don't quite understand it. Squirrels, when they sense heat, they start digging, they start chewing because they think nut, they think food. And so during the winter, we see squirrels chipping away at insulation. The transformer that delivers power to not only my house, but 7 neighbors. It sits across the street from my home. It's on my neighbor's property. It was installed in 1988. I know that firsthand by having conversations with the individuals from the utility that have come out to service it when we've lost power and when that device has a fuse that pops. That transformer is going to stress faster and faster as I continue to charge my car. And I'm not the only neighbor that has an electric vehicle. Of the 7 homes, we now have 3. It's just a matter of time until that transformer blows. And so what we're doing, and where we've focused a significant amount of time in R&D, and the device in the middle represents 12 million US dollars of R&D expense through our income statement over the last 2.5 years. So a massive investment relative to the size of our organization has been made at the request of utilities. And so a couple years ago, almost 3, utilities came to us concerned about the impact electric vehicles would have on their transformers. And in partnering with 9 utilities, we formed an advisory committee. We started work towards the delivery of the TrueSense Gateway. And that's the device in the middle of the screen. This is our intellectual property that has just recently been launched commercially with proper certifications and field trials that are now underway at 12 utilities. The TrueSense Gateway is geared to take the left side, the history of the utility industry, and enable utilities to have visibility, command, and control to that EV charger. In partnership with GE Appliances, give utilities control over an electric water heater. And the reason why that's important, EV charger, water heater, an inverter for solar or storage devices inside a home, is to enable an opportunity for utilities to access those resources in partnership with their customer through economic incentives, rates, time of use rates, or to mitigate outages, right? Leverage those resources behind the meter in a prudent and responsible way to take pressure off of what the utility has to manage on the left side of the screen. And so as an example, if this device, the TrueSense Gateway, was installed on the side of my home, and as I start to plug my vehicle more frequently and over a longer period of time, this device tracks changes in power quality to the millisecond, what's happening to voltage and current. And based on those changes of voltage, current, amperage, harmonics, waveforms, a whole number of parameters that we capture, data, we can run that through an analytics tool to help the utility pinpoint at what point is the transformer on my neighbor's property truly stressing to a point of failure, outage, or even worst case, explosion. And so the TrueSense Gateway is geared to not only improving everything on the left side of this slide, but giving the utility an understanding as I change my behavior patterns, driving an electric vehicle in this example, right? What impact is that going to have on where they need to spend money, what assets they need to prioritize, and how to ultimately manage the grid as we change our states day to day. So that's what we're working on. That's the big status update. To give you some perspective, I'm just going to fast forward to one other slide. I can kind of come back to what I just jumped through, but to give you order of magnitude, we have designed this device, developed it, tested it with 9 utilities. We refer to those utilities as an advisory committee. It's really an amazing asset for our company. We're getting utilities to work alongside our engineers, volunteering their time to help us build a device and software that solves their specific problems. Those 9 utilities in full deployment, assuming we can convince all 9 to go to full deployment, they would represent an incremental 150 million US dollars of revenue opportunity over the next 5 to 7 years to drive our business forward. And as we've commercialized the first version of the TrueSense Gateway recently, and as we started to increase our marketing, we are actively engaged with about 30 additional utilities that are requesting or have already started field trials for this device. And if those 30 utilities, if we're successful in getting them to all migrate to this technology and this solution, it would represent an incremental $350 million of opportunity over that same time frame, 5 to 7 years. So in the aggregate, we see about $500 million already actively with utilities already actively engaged with our organization. It's not backlog, doesn't mean we'll win it all. It's not guidance, but there is a substantial opportunity, and the TrueSense Gateway, from our perspective, creates a very compelling growth catalyst, not only for Tantalus, but for our shareholders. And that's what led to the successful closing of our bought deal last week. And I think it's that progress that we've made, Barton, that is really starting to get incremental attention from investors. So sorry, I was a little bit longer than I think we had planned, but I'll take a pause and see if we can turn it into a conversation as opposed to just me presenting.
Thanks, Peter. That was good. I think that laid out the business, your technology, and the opportunity quite well. Sorry, going back to that one, the 150 million from potential from, I believe it's 9 advisory committee there. If they're on the committee and they've asked you to develop this, I would think they're pretty good leads. There's a good opportunity. At least they're going to try it out, do some test trials, and see how it works.
Yeah,
That's not a leading question.
It is, and it's a very fair question. And I'm mindful of what we say in this type of platform because it's not right. This is not backlog. I'd say it's not backlog yet. We have a very good view of how the 9 utilities are evaluating this technology. All 9 have put these devices in their own test labs dating back to August of last year. So we're coming up on almost 1 year. We're 9-10 months into understanding what this device is capable of and that it's operating the way we designed it to operate. 7 of those 9 utilities have activated field trials, meaning putting this device into the field at homes once we achieved UL certification. It's a safety certification that's necessary to put a device like this into the field by a utility. The other 2 are waiting for a cellular version of this product, which is forthcoming in the next few months. So all 9 will activate field trials. We've shared in presentations, we are in contract negotiations with several of those members of the advisory committee for full-scale deployments. So I'd say we have a pretty good view and an increasing level of confidence as to how this revenue materializes for Tantalus, what portion of it materializes, when it materializes, and where it's going to materialize. So yeah, I'd say we, if you think about smaller technology companies, we've been around for a while, but we still are constantly thinking about innovation. And so kind of run this business in an entrepreneurial spirit. When we think about $12 million of R&D investment to get this product to market, we kind of did that in the context of having a very good understanding of where we get a 10x return out of the gate from this advisory committee. Gives you some sense of how we're making decisions. So I'd say hope is not a methodology when we make that type of capital allocation, into R&D. I think we have a very good, clear understanding of where, when, and how we're going to generate a return on investment for our shareholders just from the advisory committee alone.
During your initial presentation, I was really struck by your comment that I believe you said transformers are on average 44 years old, and basic stats is if the average is 44, there's some that are 5 years old. That means there got to be some that are 50, 60 years old out there. I don't know. It's not really a question. It's just I'm kind of I knew they were old, but that just seems shockingly old, and I imagine the new ones are much more efficient as well, and hopefully robust. And obviously they've got to be. Do they have? Okay, I'll make this a question. Do they actually have a transition plan, or do they? We're gonna replace the ones that start showing that they're kind of weak, or are they just once you hit 50 years old, we'll transfer them out?
Yeah, it's perplexing, isn't it? I mean, I understand the basis of the question. It's actually shocking when you think
Yeah.
about it. And particularly how, if you just take I always try to stay grounded on this stuff, but if you just think about how important electricity is in our society today, certainly here in North America, or any developed nation for that matter, and then to think the equipment, the assets that we depend on every day and how old and antiquated they are, it is shocking. So there are a couple components to your question. So let me reiterate so we're all under the same basis. Yeah, the average age of transformers in the United States exceeds the expected life of transformers, and you're absolutely right. There are an increasing percentage of new transformers that are 3, 5, 7, 10 years old. When you think about the average life, we're looking at on a weighted basis. So that means the population of transformers across the United States is significantly greater than 40 years. Where this manifests, and similarly, I don't mean this in a critical way, the average utility, I won't say all, but the average utility has operated their transformers with an assumption that they will run those transformers to a point of failure, meaning they don't really maintain, certainly not the pole top transformers and the distribution transformers. The substation transformers, since they're pieces of equipment that cost $5, $7, and $10 million, they're maintained about once a year on average. That's it. It's a check of oil and maybe a change of that oil. So not a lot of maintenance and attention to them. The average utility runs transformers until they fail. And what utilities do historically is they wait for people to call and complain about a power outage, and then they send a crew. That crew sometimes looks, inspects, determines that the transformer is what caused it. Then they got to call a different crew to bring in a transformer from their inventory and install. Without having visibility, without having data, without having sensing devices, right? Advanced metering, our TrueSense Gateway, other types of devices. In many circumstances, the utility doesn't necessarily know, the closer they get to our homes, what voltage is required. The utility may look around, right? Guys on the street, women on the street saying, okay, there's an EV charger over there. We need to upsize. But if my car's not in the driveway, they don't know that I've purchased an F-150 Lightning, which has, for passenger vehicle, the largest battery on the road today. They have no idea. I don't have to tell them, nor have I. So when they think about replacing that transformer, are they sizing it properly? Right? And if not, then they've just purchased something that's new that may be inadequate, may be oversized, it may be undersized, all of which deteriorates the performance of that transformer. So what we're trying to do quickly is with our TrueSense Gateway, we call it advanced power quality measurement. We've taken what utilities have historically done at the substation level for about $15,000 per device. And we've brought that technology, it's called a Rogowski coil. They've been around for almost 100 years. We've taken that technology that has historically sat in the substation, and we have put it into the device that's in the center of this page. And this device is about $550. So it's still expensive, but it ain't 15,000. And it allows the utility to then pinpoint where to put these devices to sense changes in power quality. And from that power quality, what's happening to those transformers. So as they're making investments and upgrading the transformer fleet, not only did their engineering team get it right with the properly sized transformer, but is that transformer operating properly? Are they maintaining it? We can help them have that visualization and an understanding of that in effectively real time. That's the fundamental shift that's happening. You can't just rip and replace millions of transformers in the United States, right? It's arguably $1 trillion of that 2 trillion. It's not possible. So how do we help the utility pinpoint what are the ones that are most vulnerable? And as an example, if the pole top transformer on my street is malfunctioning, I'd much rather have the utility send a signal down TrueSense Gateway to my EV charger, turn off the EV charger. I don't want my house to lose power. I got a 17-year-old daughter. If she can't access social media, it's a really bad day for my wife and for me. And so maybe we'll have another session on parenting skills, but right, that's the worst case scenario for me. So I'd much rather be inconvenienced about a water heater or my EV charger than losing power to my home for my family. So those are the types of things we're working on. But yeah, it's a paradigm shift, Martin, and for us, a phenomenal opportunity.
The utilities business is an interesting one as there's not really competition in the market. You live in a neighborhood, you don't get to choose who's running power. They've got their little monopolies. And obviously, you're working with nine that are very interested in this. But and like if transformers blow and some people are inconvenienced, well, they can maybe move, but they can't switch your utility provider. What incentives do they have to take on your system and not just sort of do it the standard system as before? What are their economic benefits? Are there government grants or regulatory incentives or penalties if there are failures? What's driving them on? Because for whatever their incentives are, for them to adopt this and make it a smart grid
Yeah.
and a more reliable system.
Yeah, so there are a couple things that are unfolding. Not to further complicate, but within the United States, even in Canada, we see regulated utilities. So Hydro One in Toronto, as an example, or Ontario, I should say. In California, some members of the audience may be familiar with Pacific Gas and Electric, right? The utility in San Francisco, or in the New York metropolitan area where I live, Con Edison. A lot of people are familiar with that brand. The regulated utilities are being forced, is the wrong way to put it, but regulators at a state level are changing the rules of the game for them. Again, I'll personalize here in the state of Connecticut. The regulators here, appointed by the governor, are focused on something called the equitable modern grid. And within the equitable modern grid, there are 6 regulatory drivers, one of which that ties to sustainability, reducing carbon footprint of the 2 utilities, the 2 large utilities here in the state of Connecticut, as an example. Equitable access, affordability, right? Bringing the rate structure down for those homes that really struggle paying bills. In the state of Connecticut, I think we have the 2nd highest electric rates in the United States, second only to California. So how does the regulator motivate utility to reduce rates, to reduce their carbon footprint? There are metrics, reliability and resiliency metrics, and safety metrics that utilities have to report on. It's like they get grades. Higher reliability, higher resiliency, higher safety on those metrics, SAIDI, CAFE, MAFE, a few others. That leads to being able to charge higher rates or getting a higher rate of recovery for the investments that are being made. And so in those circumstances, for the regulated utilities, I'd say what's changing, what's motivating them to change and start to invest and modernize their grid is regulatory drivers, state by state, region by region. Within the broader electric utility industry in the United States, we have almost 2,600 distribution companies, public power utilities owned by a city, electric cooperatives owned by members that live in a region or an area. And in those circumstances, cities are mandating that the utilities start to modernize so that their cities can drive economic development, can be a location or a destination of choice for people moving in. And so we see, depending on whether it's an investor-owned utility that's regulated, public power or electric co-op, kind of answer to a city, answer to members, right? There are a couple different drivers, but in all circumstances, it's the stakeholders, the regulators, the residences, the members that are really trying to drive behavior change. That's not true of all utilities. There's some that'll be leaders, and there'll be some that are followers. Some a little bit more aggressive in the adoption of technology, like our advisory committee members. Some that'll be, wait 15, 20 years to do it. And then last but not least, Martin, I know it's a long-winded answer to your question, regulatory, city, member, motivation. There is an obscene amount of money that the United States government has thrown at the utility industry, right, to incentivize them to start to modernize. And that's about $500 billion, 500 billion, that is earmarked, that is available, and where our technology is an allowable use. So we're seeing not all utilities, interestingly enough, but we're certainly seeing an increasing number of utilities try to tap into those dollars to offset some of the upfront investment that's needed to modernize quickly.
With any competitive environment, there's competitors. What are you seeing in terms of competitors putting out similar products or other types of solutions that can maybe give the utilities similar information in a different manner?
Yeah, so on the left side of this slide, it's pretty competitive. Within the vast majority of what we do is adding intelligence at the meter level, at the sensor level, at the substation level. We partner with and we compete with some of the largest meter manufacturers. Itron, publicly traded on NASDAQ, one of the few that's actually available, right, as a publicly traded company in North America. Landis+Gyr, publicly traded in Switzerland, so European-based company. Our device, our intelligence goes into their meters. They similarly have an intelligent device that they're trying to position to utilities. And I'd say the way we compare ourselves is not necessarily on revenue size, right? Itron selling millions of meters a year globally, much larger organization, but we add about 20 new utilities a year through our sales efforts to our user community. And we've seen that type of growth for the last 10 years. I was recruited into the company in 2014. I'm not the founder. That's when I started my journey here at Tantalus as CEO. And when I joined, we had 54 utilities as within our user community. We're on the precipice of crossing 300 utilities in a 10-year time frame since I've been here, from 54 to 300. So I think we're pretty effective at competing against much larger organizations, particularly on the metering side. As it relates to the TrueSense Gateway, we've been pretty specific about this. We have a first mover advantage. We are first to market with this type of product. And I'd say it takes some pressure away from the competition we see with meters. This device, I'll just give you another visual, and then I'll come back to where we're seeing other companies emerge for the TrueSense Gateway from a competitive perspective. But right, this is a disaggregation of the TrueSense Gateway in the middle. And this device plugs into any existing meter socket, and any existing meter plugs into the front of it. So we're retrofitting into existing infrastructure, meaning a utility may not have to upgrade that meter anytime soon if our TrueSense Gateway sits in between like a collar. between the meter and the socket. And so, we see a great opportunity for utilities that maybe allocating more money to a meter is not their best use of proceeds. Instead, invest in the TrueSense Gateway, leave the meter alone. Maybe it has intelligence, maybe it doesn't, but then reallocate those dollars elsewhere based on all the data that we capture and through analytics, pinpointing where the utility has the greatest risk in the distribution grid. As it relates to competition on the TrueSense Gateway, Tesla has some literature, and we understand some prototypes around a device that similarly sits between meter socket and meter. The big difference on the Tesla device is it is only focused on behind the meter control. It's focused on controlling the Tesla charger, the Tesla inverter for Elon Musk's rooftop shingles that are solar, or the Powerwall that's starting to gain real traction, certainly here in the United States as that price point comes down. It's geared towards the app that Tesla uses or makes available to their consumers on, hey, I've got solar, I've got storage, I've got an EV. How do I manage my energy consumption? It's not geared to power quality. It's not geared to metering. It's not geared to communications for the utility. It's really a consumer-centric approach. From our perspective, not a fair competitive comparison, but it's great validation from our perspective that Tesla is throwing real money at trying to control their own devices behind the meter. We're just trying to do it for utilities. Tesla's trying to do it for their customers. So that's one. There's a private company in the United States that has a device that looks kind of similar. It is solely focused on communicating to rooftop solar inverters, and it is more of a consumer play. And we've seen one other, I'd say, emerging privately held company, venture-backed here in the US, that has a device similar to this that's solely focused on power quality measurement. So I'd say we've got like four birds with one stone. We've seen Tesla focus on one bird, their stuff. We've seen another company focus just on solar, rooftop solar installation, nothing else. And we've seen one company start to surface prototyping power quality sensing, to try to protect the assets on the left side of this slide. So I'd say we're first to market, and we are the only one that encompasses behind the meter control, power quality measurement, metering capabilities. And so I think that gives us a really competitive advantage for an extended period of time.
You talked about your sales force and your relationship with the utilities or the distribution companies. Are there distributors you can work with or other power meter that you can partner with where they add yours to a bundle of a new meter and get some leverage so you don't have to do all the business development and sales work yourself?
That's the 20 channel partners that I referenced earlier. And the answer to your question is absolutely. How do we get to as many utilities as quickly as possible? We certainly have our sales team effective. But if you think about the country club approach, we have distributors that have been selling to a large number of utilities for decades. And as they represent us and identify opportunity, sort of the good fellas, they make the introduction of utility to Tantalus, our sales organization, our product management, our executive team members, engineers come running through the door to try to explain what we do, why we think it's differentiated, and most importantly, understand what problems the utility has and how our technology solves those problems. But yeah, I'll give you an example, Martin. For the TrueSense Gateway, there are three versions of this. Two of them tie to the 220 utilities in the United States that are dropping fiber optics directly to homes to solve what's called the broadband divide that surfaced during COVID here in the US. Canada has a similar problem. It's just we haven't seen utilities in Canada kind of step into that void just yet. I think it may come. In the US, public power and electric cooperative utilities are receiving state and federal money to actually bring broadband services in addition to electricity in rural communities or underserved communities. And there's about 20% of the US today that does not have affordable and reliable access to broadband services at their home. It's a shocking percentage if you think about it. Right? This meeting doesn't happen, but for broadband. So this device actually can connect. I'm going to flip slides here. This is the fiber version. And so a fiber optic cable actually comes up through the bottom of our TrueSense Gateway. That's what this black cable is. And it plugs into this little device right in the middle, an SFP. And from that fiber network, not only can we deliver power to and an Ethernet cable or another fiber strand to an optical network terminal, not our business. It's that optical network terminal that then delivers the broadband services into the home. But we can take data and use that fiber cable, right, and backhaul data over fiber. It's streaming of data. It's streaming of data from the water heater, from the EV charger. And so in that circumstance, we have a very unique first mover advantage where we are the only company that can help utilities connect fiber to their meter, fiber to other assets. And so, sorry for getting lost in the weeds, Irby, IRBY, is one of our channel partners. They are one of our first channel partners for the TrueSense Gateway. Of the 30 utilities that we've identified outside our advisory committee, 20 of those utilities are where Irby is actually deploying fiber, and utilities where Irby has been selling to those utilities for decades. And so in that circumstance, one relationship, Irby, translates into 20 identified and qualified leads for Tantalus. That's just the tip of the iceberg on how big Irby is nationwide. But that's an example where we absolutely can get some leverage in driving scale as quickly as possible.
The revenues on for the TrueSense, is it just a one-time equipment sales, or does that generate some ongoing software or service, or what is the recurring revenue aspect to the TrueSense?
Yeah, so I'll give you some very specific numbers, and then I may try to fast forward to a slide that explains our revenue model. This device, prices are going to vary based on the bells and whistles that utility put in here. Do they want single band or dual band Wi-Fi to send their own communication signal into the home? Or are they going to use something called Home Plug 2.0, send a IP address through all the electric wires into electric outlets and circuit breakers? So depending on the bells and the whistles that go into this, I'm just going to use an average price. Average price that we're sort of seeing take hold is about $550. In that $550, 500 is one time. It's the price of the device itself. $50 is the price of the software that sits on this device, and that's an upfront perpetual license. It's the way most utilities buy software. Very few utilities can support or accept a SaaS offering. It's starting to change a little bit, and we've proven that with analytics. But for the most part, this is a CapEx investment. $500 for the device, $50 upfront for software. On that $50 for software, we charge a 22% annual maintenance fee to maintain that software and provide dot releases and support and services. So about $10, I'm rounding, per device per year over expected life, 15 years. So we actually see out of the gate recurring revenue from every device we put in the field. The same is for all of the devices we've been building and putting into the field now for a few decades. So the intent is sell the device, we get paid for it, we get pretty good gross profit margin on it to drive cash flow. And then once that device is deployed, we're monetizing that data through the software and the 22% annual maintenance tail. As we get smarter about the data we collect, as we build more analytics tools, as we enhance our suite of software applications, right, that'll lead to an increased amount of recurring revenue per device per year, Martin. I'll just actually, I don't need to flip to the slide and cause confusion. It's upfront device, upfront software license, a tail of recurring revenue for every device sold per year.
And are the hardware margins on this comparable to your existing hardware margins?
Yep. So our hardware margins historically trend somewhere between 35 and 40%. If folks dig into our hardware margin in Q1 of this year, you'll see it was actually north of 40%. Some of that ties to the product mix that's shipped in a quarter or in a calendar year. Yeah, the expected gross profit margin on the hardware for this device is, in volume, our expectation is at or slightly above 40%. So it's pretty attractive.
Currently, your business is either exclusively or almost exclusively North America. Are there international opportunities where maybe you just license out the technology or find distribution partners globally for it? Or is there something with foreign or international grids that are different than what you've designed here?
So taking the last portion of your question first, there are really two electric standards globally. One we see here in North America is ANSI, ANSI. What you see in Europe, certain portions of Europe, and why the electric plugs are always different, right? And you got to have the adapter for your iPhone or your laptop when you travel into the UK or Germany or other places, continental Europe. It's called IEC. The ANSI meter standard or the ANSI standard is not only applicable here in North America, there are portions of Southeast Asia, there are portions of Asia, and there are portions of South America where the ANSI standard is applicable. Our technology, all of it, has been designed to the ANSI standard. We have not designed to the IEC standard that would make the TrueSense Gateway, as an example, applicable globally, the two different standards that apply. So the answer is just in terms of size and resource, we absolutely can expand internationally with an ANSI standard and this product that's now certified to go into any ANSI meter socket, as an example. I think the opportunity is so robust in the United States and in Canada for us today. I think that's where our primary focus is. I'd say there's a force multiplier as we can put our head up. And certainly as we get this activated with an increasing number of utilities and start to see that return on investment that we've made on behalf of our shareholders, I think there are a couple of paths for us to expand internationally. And in previous company that I ran in this industry, supporting utilities, we ended up with a trade sale to Danaher Corporation through Morgan Stanley as our banker. We didn't take the company public. In that circumstance, I had a decent amount of experience taking technology into different portions of the world. And I think to your point, I could see the combination of partners. I could see joint ventures. I could actually see planting a Tantalus flag where we see the market opportunity is robust enough, and then building out that local sales channel, similar to what we've done in the US and in Canada, to have those established relationships and gain access to utilities quickly. So it's in the broader plan. I'd say the next 2 to 3 years, it's very much focused on the United States and Canada because the market opportunity for us is massive.
All right. We are at an hour here into this, so we need to wrap this up, and I need to let you get going here. But what kind of news flow should investors be expecting over the next 6 to 12 months? Hopefully, I guess, converting some of these trials into full-on customers, or what sorts of things should we be on the lookout for?
Yeah, and catalysts for that, or validation
Yeah.
of some of the catalysts. Yeah, I appreciate the question, Martin. So, beyond our standard quarterly financial filings and some of the information that we include in that, like the number of new utilities to the user community, or orders that we've converted from the pipeline. I think investors can be on the lookout for progress that we're making with the fiber version of the TrueSense Gateway. That's the first one that was UL certified several weeks ago and now in field trials. So what's the status of those field trials? What's the status of advisory committee members that are focused on the fiber version as opposed to a cellular version, as an example? And so I think we'll have some selective news on conversion of a few of those advisory committee members from advisory committee member to field trial to full deployment. I think we'll pick and choose where we have utility by utility news. The reason for that is some are very strategic, influential in their areas or their regions, We also don't need to telegraph to our competition where we're gaining traction. But I would think, just momentum on the fiber gateway. Incrementally, upcoming deliverables from our organization and our team is the certification of the Ethernet version of this product and the cellular version of this product, all of which are in process and expected to hit over the next several months. So those would be big milestones and catalysts that we now are fully certified, available for sale, fiber, Ethernet, cellular. Those are the three versions. As it relates to other aspects of the company, the progress that we're making on our transformer analytics and an increasing number of utilities that are demoing and opting into a SaaS subscription for our analytics tools. That's another area of focus for us. The dollars aren't as significant, but I think demonstrating the ability of harnessing the power of data through analytics and getting more utilities to adopt that SaaS offering, great barometer for us to increase recurring revenue. So those are a couple areas of focus for us: the delivery of the TrueSense Gateway, the progress that we're making in getting it into the field and driving backlog, orders, backlog, revenue, cash flow, and then the progress that we're making on our analytics capabilities. Those would be the things I'd really pay attention. That's what we're paying attention to. Let me put it that way.
All right. And as we wrap this up, what's the final thoughts or view that you want to leave viewers and investors with as we close things up here?
Yeah. So, one of the rewarding aspects of the financing that we just completed with the support of Cormark, Canaccord, Beacon, Haywood, and Paradigm, all covering companies. The president's list was pretty robust, including an investment from myself. And so, to that end, Martin, why did I, Pete Londa, CEO, invest? It's not just because I'm the CEO, so I should. What I see is a couple of things. We have a very substantive business that is still growing on the left side of this page. We're adding utility after utility, right? Quarter after quarter, that user community is growing. And that business, as we start to reduce the R&D on the TrueSense Gateway, is right at EBITDA neutral. We have a long history of EBITDA positive, but for the $12 million of R&D expense that we've run through our income statement over the last 2.5 years. So we have a growing, profitable, valuable business on the left-hand side. The TrueSense Gateway is a paradigm shift for Tantalus and for utilities. Relative to where we're valued at, regardless of the run-up and the year-to-date performance of our stock, when you look at consensus, when I look at the fundamental values of Tantalus relative to peers, we're trading at a 50, if not 60% discount to some larger companies in our space, if not greater in some circumstances. And so, in my opinion, not only are we undervalued on what we're doing historically on the left side of the slide, it's almost a free option on the growth trajectory from the TrueSense Gateway. And so I think as investors evaluate, track our progress, track the growth of our organization, track the progress we're making on the TrueSense Gateway, because I don't think that that's fully appreciated yet in capital markets here in Canada. I'd also say we're one of the few pure plays opportunities, Canada or the United States, that are publicly traded, focused on helping utilities modernize the grid to prepare for the electrification of everything, including transportation. And so that's why I'll end where I started. We sit right at the nexus of those two massive investment theses that have macro drivers and a lot of tailwinds to support for the next decade.
Peter, that was excellent. Thank you very much. I appreciate the update, and congratulations on getting so much accomplished and a very exciting runway you have ahead of you. Thanks, and talk to you again soon, hopefully. That'd be great.
Hopefully it won't take 3 years to reconnect.
Sounds good. Talk to you soon. Bye.
Thanks. Bye-bye.